occasionally I do zip it. Okay, one of the first meetings I had this week was this is also very exciting. I had 2 referrals this week, which referrals are fantastic, and I get referrals a lot, and I just love them because that means that clients are happy with what we're doing, right? And so this person came as a referral, and they have quite a, not a huge amount of debt, but they do have some debt. The majority of their debt is like his old debt that he brought into the relationship. But they are working fools, and they're really in a transition, getting married, moving to a different town, but she's done with school, got her RN degree. And so now we can most likely start a policy as soon as she starts traveling. She's going to do some traveling nursing, just because that is like the pay, she said, she can make in 3 months, which she makes in a year, working at signing a contract with a hospital or clinic or something like that. And so they want to start a business. Here is the thing with them. Is they bought this little house, $40,000 contract for deed. Okay. She said to me, well, I want to get that paid off in 2 years. So we're going to pay like $1,600 a month or whatever it was, basically double what they're paying now. And my question to her is why? Why are you doing that? Why would you pay extra every single month and set it up that way? So now you're obligated to pay it, but you're starting a business. What if you need to buy another vehicle for that business? What if you need to add employees? What if you want to expand the business? What if the business isn't doing well and we just don't have the money? I said, you don't want to, if you can pay it off early, great. If you have the extra money to do so. But if you don't, why not just keep making the $800 payment, use the cash flow to put into the business so it can create more cash flow, right? And so people are not like, I went over this several times this week. I did it with another lady that I talked to that was a business owner, that is a business owner as well. And she is sitting on the SBA loan money. She got quite a bit of it. She's used half of it. She has not used the other half. And why? Why aren't we using it for marketing? Why aren't we using it to buy more machines? Why aren't we using it to expand? Why aren't we doing those things? Now, her reasoning was because I'm scared I'm going to be too busy. Okay. To somebody like me, that just never crosses my mind. I guess I'm busy and I'm booked out, right? Like, I can only work so many hours a day for my mental health and your good health. So I don't yell at you guys. Otherwise, I'm going to be crabby and yelling. So you don't want me working 24/7. And so, but she, being the people pleaser that she is, she wants to make sure that everybody can get help because it makes them healthy and it makes them feel better in her, whatever her business is. And I'm like, that's great. But if you're not healthy, what does it matter? If people have to wait to get in to see you, it's okay. It's what it is, right? If some of you remember last year, right now, I think I'm booking out like 2 weeks or something like that. Last year, I was booking out 6 weeks. You guys all waited for me, which was absolutely fantastic. This week, here's an example. This week, I had 2 people that either canceled last minute or just didn't show up. 2 people this week because I'm only booking out 2 weeks. Guess what? When I was booking out 6 weeks, y'all showed up on time and you didn't miss your appointments and you didn't cancel last minute because you take it more seriously. And so if you have a business, there is never really a bad thing about being too busy. Now, there is a bad thing about being too busy for too long, that you let your customer service go down. But she is actively trying to add people to the business. So use that money to create more cash flow in the business, right? I had to hire another assistant. So I have 2 of them because our customer service was sucking. And I don't want my clients to be unhappy. So we added another assistant so that we can make sure the phone is answered all the time. People's questions are answered within minutes. Clients are being taken care of. Clients are being contacted, right? We are making sure that that is happening rather than saying, well, I'm just too busy. I'm just not going to take any more business. As an entrepreneur, it's our job to employ those people, right? It's when we're too busy that we can't keep up that it's not good. And this is no different in the farming world. If we rent too much land and we can't manage all that land, we have too much. I look at people's numbers. Don't tell me I don't know what I'm talking about. I hear this all the time. Well, Mary Jo, you don't know. Oh, BS. I know, because I'm looking at numbers. People that are a smaller operation are sometimes making more money than the bigger operations, right? If we're big, we have to be managed correctly. If we're small, we have to be managed correctly. At the end of the day, in the farming world, it is not how many acres I can farm, it is how much profit did I make. And I don't care how many acres you have. If you want to make more profit, you need more acres a lot of times, right? Or you just do things differently to make more profit. But if you want to make more profit, at the end of the day, we have to manage differently. We have to do different things. And it's the same thing. It's not, if we get too big too fast, we could actually hurt ourselves. I see it all the time. We want to get so big so fast that we have so many expenses, our profit is in the tank. Okay? So with her, it was, I tend to end up doing a lot of business coaching, kind of like what I'm doing right now, with my clients that are business owners, because I am so passionate about it. I did so many things wrong that I don't want people to repeat what I did, right? Because it stinks. So, if you have a business, if you are farming, if you are ranching, does it make sense? And I talk about this all the time with clients. Does it make sense to pay stuff off early? Or can we take that money and use it to expand the farm, use it to expand the business that could create more cash flow and generate more income? Okay, I want you to think about that next time you go, I want to pay extra on that bill. I want to get that paid off. Paying things off is great. I don't like to have the debt either, but I want to have the cash flow so I can go do other things. I had another client that was a rancher and a contractor, and she just landed a big contract. So this is the first time she's going to have a whole ton of money at the end of the year, and they are looking for a place to put that money. Now, I could have come in and said, oh, geez, we could do $100,000 premium a year. That is no big deal at all. But it's government contracts. And we don't know. Her construction business is based on contracts with the government. So we don't know if she's going to get a job from year to year. There is no loyalty there. There is no guarantee for anything there. And so we are going to have to start really small for her, like based on what she's making on the ranch, not necessarily what the construction business can make. And so, we could have easily done probably 6 figures. We're going to do maybe 10 grand a year, right? Maybe 12. Because I want to be very, very conservative so that if these contracts don't happen next year, that she has the money. The problem is now we need to figure out what to do with the other couple $100,000. It's just going to be sitting there. And that, if she wants to use it as cash, great, use it as cash, but make sure that you pay it back. I had a, let me see my comments here. Jared, they're homesick, so phone call with appointments and growers today. Oh no, all 3 of them are sick? That stinks. We have a friend that all 3 kids have COVID, so they couldn't even start school yesterday. Hey, Justin, how are ya? Good morning, Janine. Yes, Winnie, yes. Winnie's just piping in here, y'all. If you see her comments, because she is a practitioner in Canada helping farmers. So if we have any Canadians, call Winnie. Okay, we had another one that I'm not going to get too detailed about this because it generated today's podcast. So if you want to hear me go on a 15-minute, very passionate topic, you can listen to today's podcast and get the idea of what happened here. But it was a lady that was following up for her brother who says that, you know, he can no longer farm the way he was because of health. So now he has to figure out what to do ranching, and he's not making any money, and he doesn't have any money to live. And so she's running cows with him and letting him keep her profits from the calves because he needs the money. That is called enabling, and I am not okay with that. And so it generated today's podcast. But here's the deal. Brother wasn't in the meeting. She was looking to help him. I don't think it necessarily crossed her mind that she could start a policy and lend money to him. That's fine if you want to help him. I'm all for it, plus interest. Pay it back, right? We are not a charity case. We are bankers. And you're going to put our little banker hat on, and we're going to lend the money, and we're going to ask for it back. And the comment was, well, it's all he knows how to do. Oh, no. That is not all you know how to do. That is an excuse. Just because you farmed and ranched your whole life doesn't mean it's the only thing you know how to do. What else can you do to generate income? If this ranch is not making money and we don't want to lose the land, can we sell all our cows? Can we do some custom grazing so we get paid to have cattle, guaranteed, rather than buying cattle, having a cattle note, and then cattle prices go down and we can't even sell a calf for what we need to pay for the cows, right? So is that an option? Can we just rent the land out? I have done the numbers before for some farmers, and I have one farmer in particular who his land was basically given to him, and he can't make it, right? Because he's not paying attention to his numbers. He could just stop farming altogether, rent out the land, and make more money than he's ever made any year and not even have to work. There is nothing wrong with renting out land. There is nothing wrong with saying, you know what, I have land, but I'm not going to farm it. Guess what? I have land. I'm not ranching it. I don't have cows on it, and I don't intend to go buy any cows. I intend to use other people's cows to return my ground to the nutrient base that I want, right? I'm going to let other people run cows on my land. I'm not doing it because I don't want A, the responsibility of cows, and B, I don't want a loan for the cows. I don't want to calve them out. Not my thing. So if this is something that you have and you're not making money, why? Look at it. It's the same thing I preach every single time I talk. I feel like a broken record. But clearly, it's not soaking in. It's no different than my sweet little business owner who is scared of too much profit. I said, you're not in business to give away services. This is how much, and she keeps her books. Fantastic. We knew exactly how much it cost her to operate in a month. So how much do you need to charge to cover your operating costs on how many days a month you need to work? We're not working for free because we're a charity case. Unless you have a nonprofit. I mean, if you want to lose money, then you may want to start a nonprofit. If you want to work for free, if you want to do things for free. But we have to look at our numbers and make sure that it makes sense. And quit enabling people. Ugh. You know, I love Jolene Brown. And if y'all don't know who Jolene Brown is, go look her up. Like, you can go into Google and Google Jolene Brown, and she is everywhere. The lady is everywhere. She writes articles, and I love her because she is very matter of fact, like I am. And she tells you she is a farm business manager. She will go into these families and figure out why they're not running correctly. Why aren't these farms being successful? Whatever's going on. And she ends up having a lot of the same conversations I have. Well, I end up having a lot of the same conversations she has. And her conversations include duct tape, tissues, and a 2x4, because sometimes you need the 2x4. And I 100% agree with her. In this case, I could have probably used a 2x4. Not on the sister, but if the brother ever wants to talk to me. But he's not doing the research. She's doing it for him. Enabling. It's like clients that say, well, Mary Jo, I really want mom and dad to read the book, but they just won't. I want them to do this, but they just won't. If you tell somebody about this and they can't read the book, it is, for those of all of you listening, this book is 99 pages. 99 pages. Look at how skinny, okay? It's not even like tiny font. It's big font, okay? This book, Life Without the Bank, isn't even 99 pages. It is, 95. It's 5 pages short. 4 pages might be a deal breaker for y'all. This book is 95 pages. So, there's no excuse. You can't, 2 hours? 3 hours tops is what it takes most people to read that book. It takes me a little longer. I'm a slow reader. I like to highlight. I like to make notes. I like to write down questions, right? It is even Nelson's book. Super thin. Just because it's big, full-size pieces of paper, it does not matter, because look it. This is 1 page. He just needed 1 more page for 2 lines. So if somebody cannot read a tiny little book, how committed are they to making change? How committed are they to helping you, to listening to you? You give them the book. If they don't read it, they don't read it. It tells you a lot about a person. It really does. Hey, Tyler, how are you this morning? Okay, I had a client meeting this week where one of our clients got some of the federal grant money, the PPP money, and it's forgiven. Most of it is being forgiven. And so they paid off a lot of debt with that freed up $7,500. Now, this happens a lot. This is happening with business owners. This is happening with a lot of my farmers. And so we freed up that money, and I said, oh, so are you going to be saving that money? You can start another policy with it. You can put it in savings. And her response was, well, I want to pay off a bank loan with that. And again, I said, you just told me that you are probably going to need a shop. You're going to need to build a shop. You may need to buy more equipment. You may need to buy land. If the neighbor guy passes away who you're renting from and he's single, no children, you may be needing to buy land. So what you're going to do is give the bank the $7,500 a year to pay down a note, not pay it off, to pay down a note. And then if you need the money for land or a shop or expansion, you get to go back to the bank and borrow the exact same money that you just gave them. It was hard for her to really, I don't know if it was hard for her to understand or hard for her to agree, because she didn't want to do it, right? And I don't care what you do. It's ultimately your money. But I want you to see what is happening here. You are limiting your access to liquid money. Okay? This is the same thing that I told the first person I talked about. And she said, oh, Robert Kiyosaki talks about that. Yes, he does. Because those with cash, opportunity arises. And if you don't have the cash, guess what? You're going to miss out on the land that you're renting. Because the guy dies and now you have to buy it, and Guess what? You didn't have the cash to do so. You didn't have the cash for a down payment. And in this particular scenario, they are concerned about FSA kicking them out. So she wants to get that paid down. So when FSA kicks them out, they then don't have to roll so much over to a bank. And I get it. I 100% understand. She works at FSA. She knows the rules. She knows what's coming down the pipeline. But is there a difference? Is there a difference if I pay down a note and then it goes to the bank, or if I put it over here in savings, so when it goes to the bank, I can just put it there then? There's no difference. The only difference is when I put it in my savings first, I could have used it. If I pay it directly to FSA, I can't use it. Right? So, you need to ask yourself, when you are getting these PPP loans and all these government bailout things that are coming out, because it seems like it's never going to end at this point. I talked to an accountant yesterday, and he's like, yeah, we're just waiting for the next round. He's like, we can't even get ahead of it. The child tax credit is very confusing. But we're getting an advance on the child tax credit. That is going to affect your taxes because you're not going to get it then. You're getting an advancement. And so what are we doing with that money? That's $3,000 a year per child. Per child. Are we using that to set aside? Are we using that to pay off debt? What are we doing with it? Can we use it to expand our business? Right? Are we going to be honest bankers and use that money? Or exactly what Winnie says, beat Parkinson's law. The neighbors are going to go buy something else. And then when taxes come, they're going to be like, why didn't I get any money back? Because you already did. You got it. You got it back there. You got it back there and you spent it. And you didn't look at what you were spending it on. I'm not saying be Dave Ramsey-ish and don't spend anything. I'm just saying, if we freed up $7,500 a year, can we take $5,000 of it and put it in savings? And this is what she said to me. Well, things have been pretty tight, so it was nice to have that freed up. Uh-huh. And you made do when things were tight, right? So now things can be as tight, but we have $7,500 going to savings. So it's tight because we're still making the payment, but it's coming to us. It's all how we think about it. And it's hard to rewire our brain. It's very, very hard because the noise is not telling us that. And this lovely lady works at the bank, right? She works in that system. So every day she has all the traditional noise coming to her. And once in a while, I am in her ear. Here's another thing I want to talk about today. This week, I had two or three new policy holders that so they went through underwriting. They're new clients. They went through the underwriting process and it came back approved. Now, when you come back approved, you will come back preferred health. It goes preferred. Every company is a little bit different, but most of them are preferred, select, standard. Those are the three normal ones, right? Preferred is the super healthy. And then from standard, it goes table A, B, C, D, E, F, G, H, I, J. I have never gone below J, but it will go all the way to J. The further down we go, the more costly the death benefit gets, right? So this week I had two for sure, maybe three that came back table D as in dog. Not the best health rating in the world, but not the worst. And so as a table, some people say, well, I'm just not healthy. It's not going to work. Well, I had two of them. I had three. So two of them that were table D were in their 50s. The other table D was early 20s, like 22 years old. And all for different health reasons. Some of them just had bad health, like just, heart, whatever. Other ones were weight issues. One of them was antidepressants. And so if we're on antidepressants, it's not a big deal. But if we're new to antidepressants, it's a big deal. Because we have not established if the medication is going to be okay with our body, and if we're going to be okay mentally, and what do those medical records say. Every time you go in, you have to answer the questions of how you're doing mentally. And so where you're at in that aspect, the insurance company, it's a huge risk if you were to commit suicide. And so, because here's another thing. A lot of people think that life insurance companies won't pay if it is a suicide. They are not going to pay if it's suicide within the first 2 years, or at least my company. Anything after that, they're on the hook for. So they are going to make sure that you are healthy. So there's a lot of factors that can come into creating a table D health rating. Now, I want to tell you, on my young person that was a table D, she had her policy, instead of it breaking even at, like, the break even point is where what you put in as premium equals cash value. Okay? Hers went 3 years longer, but she's so young that what does it matter? It's like 3 years. So I ran her without the table D just to see. It was not that much different. She may as well just get the policy, and then if we need to change it going forward, we can, because the life insurance company will allow that. And so now we can change that going forward if she goes through a new health rating. The 50-year-olds, so I can do a policy a couple ways. I can do a 10 pay, which means we only pay for 10 years and then we're done. Or I can do a paid up till you're 121. Okay? So you pay until you're 121 years old. Or you die. Whatever happens first. So the 50-year-olds, I ran their illustrations, and they were at like 53 cents for every dollar of death benefit. So I'll go down to like 85 years old. Look how much premium we've put in. We've paid 85 cents, or I'm sorry, oh my gosh. We have paid 53 cents for every dollar of death benefit. Okay? So then I did a 10 pay on a table D, only going to pay in for 10 years. It went to 43 cents. The moral of that story, 43 cents is a typical buy on a 50-year-old that is of average health, okay? It is not costing us that much more. There are ways to still write a policy. So if you are not in the best health, that doesn't matter. We can typically still do something. It's going to buy less death benefit, but we still put the same amount of premium in. Cash value still performs almost exactly the same. Okay? So don't think, well, I'm not healthy, we can't do anything. Well, you're going to die. We're all going to die. And so you should still have the death benefit for your heirs. Do you have to pay a little more for it? Yep, you do. I have a cousin, 43 years old, heart attack. He is not now insurable for 10 years. I sure hope he has insurance. Not something. See, I have feelers. I didn't even ask that yet. I'm going to ask it, and I'm going to say, do you at least have term insurance? Because what? That can possibly be converted to whole life. I am currently helping a gentleman that is 50 years old. he's not going to be able to write a policy with me. He is uninsurable, but he has 2 policies with some other company. And I am helping him look at his illustrations to see what we can do to at least save some death benefit, because he's not going to be insurable. If he has cancer, he's not going to be insurable for a very, very long time, if at all, ever. And so we have to make sure that we can save what we have. And so a lot of times if we have term insurance and we're not insurable anymore, we can convert some of that to whole life maybe. In this gentleman's case, he asked them, "Can we convert to whole life?" And they said yes. And then they sent him a universal life illustration. That's not whole life. That's universal life. So I replied back and said, "This isn't whole life. Tell them we want whole life." They come back and say, "Nope, we don't sell whole life. We can only convert to universal life." So I look at the illustration. He runs out of money and no death benefit at 75 years old. He's 50. 75 years old? Are you out of your mind on the guaranteed side of that UL? Said, "Send it back and tell them we want death benefit until you are 100. He sends me a new illustration. I don't know if it was the same one and he attached the wrong one or what. But I said this collapses at 75. Do I need to call these people? Like, we want to make sure he has death benefit. That's why we're converting, because something drastic happened in his health and we need to save something for his family. This is why you need a good agent, people. Okay. So if you are, let me close that out. If you are not super duper healthy, don't think that we can't do anything. Is it going to cost more? Yes. Can we still use it for banking? Yes. Oh, I had another client. Let me see. Oh my God, so many comments. I love it. Wouldn't there be a difference if interest rates between savings account and loan rates? Jared, it's not necessarily, that's a good question. It's not necessarily about the interest rate on the savings versus the loan rate, because we're putting it in savings to use it to buy things to create cash flow. We're putting it there to have liquidity for opportunities. The rate, savings isn't paying absolutely anything, right? But if we have liquidity because we know something's coming, I would rather pay a 3.5% bank rate right now and have that money so I have money for land. So I have money to expand a business. I have money to buy equipment, fertilizer, whatever, right? Use it, even if nothing else, Jared, use it for operating, because then you don't have to go to the bank for operating. And your line of credit could be, you could use less line of credit. Have a panel between you and Dave at Commodity Classic. Like Dave Ramsey's at Commodity Classic? That's the best Commodity Classic can do. That's unfortunate. I actually agree with Dave on quite a few things. I just don't agree with him on life insurance because he's too ignorant to actually look at it. Yep, you are right, Scott. And hello, good morning, Mr. Chapman. Bye, Winnie. Have a good one. Well, good morning, Mr. Randy. How are ya? Okay. My final comments this morning are, I had another client who called and said, I think we want to reduce my premium on my wife's policy. And we were doing like $40,000 a year. And I said, okay, that's fine. Whatever you want to do. So we were looking at numbers and he said, I'm just worried that we're not going to be able to pay it. And then he was telling me how rent went up $50 an acre where he's at. They increased rent by $50 an acre and people are still calling asking to rent land. And I said, oh, is this some of the land that you own? And he said, no, we rent it from my in-laws, but then we sublease it. Okay, well, we're renting it from family. Are you getting a deal on it? Yep. So he's making like 35,000 maybe of profit a year by subleasing it. Well, I'm like, there's your premium for your wife's policy. And he said, well, I wanted to put that on the kids, put all that money into the kids' policies so that they have money for college. All right, here's the deal, folks. A kid's policy does not grow as fast as an adult's policy. We have a limit of up to $1 million of death benefit that we can put on children. We are not able to get enough money into those policies that we have this, and especially their kids are not, like they have 0 to 9. The 9-year-old, we don't have enough time to be putting money into this policy to be able to pay for college. And college is like maybe a 6%, I think last I looked, 6 or 8% inflation rate on college. And so we just don't have the time to do that. But because of how their policy is structured. But if we took the money and put it on mom's policy, she's going to have $400,000 in 10 years. She's going to have enough money to send him to college or send 2 or 3 to college, right? Through her policies. And then the kids pay back. And we created like $2.8 million of death benefit on mom. Are we better off to take that money and put it on mom? We can take some of it and put it on the kids. Absolutely. Every kid should have insurance. It doesn't matter, but we can't, I've yet to see a policy that we are sending kids to school with it, unless we start at 0 with $5,000 a year of premium. And that's every child, right? Those kids are going to have great policies because they've got 18 years. They started from 0. But when we're starting so close to them going to school, and yes, 9 is close because we only have 9 years, takes 25 to break even typically. 20 to 25. So we have to make sure, like we have to think about what is the goal. If the goal is to send them to college, why can't we send them to college through our policy? Make them pay it back plus interest, because remember, we are not a charity case. We are bankers. And those kids can pay it back plus interest because it's all going to come back to them anyway. So who cares? And some of them may not want to go to college. Some of them may want to start a business. So lend them the same money you would have paid for Johnny's college. Let Susie start a business with it. So sometimes I will say, depending on what our goal is, it might be better to put the majority of that money on the parent so that the parent can lend the money to the kid. And there's this huge misconception that kids' policies are better than adults because they're younger. And that is a large misconception. They are good. They are better because they buy cheaper death benefit. But they're not better as far as cash value and infinite banking. Okay, that's it. That is all I have for today. I had, 4 new meetings and I went for 45 minutes here. I guess I had more to say than I thought. If you guys have questions though, now is the time to let me know what those are so I can get those answered. Jared, I hope that answered your question. And Dave Ramsey. Okay, if you guys have not gotten these books, go to farmingwithoutthebank.com and grab them. If you have read these 3, but you've not read Warehouse of Wealth, go get it. It's a little bit bigger book. And don't be, if Randy is still on here, Randy read The Warehouse of Wealth as well. That book is 126 pages. Only 26 more than mine. But it's so good. It is so, so good. And it really gets you in the mindset of the concept. As always, let me know if you need anything. You can message me here. You can email me at maryjo@withoutthebank. you can go to withoutthebank.com or farmingwithoutthebank.com, grab those books. I was going to say something else. I don't remember. If you've not read If We've Not Met Yet, then just schedule your appointment. If you've bought the books, you are getting a link to my calendar to schedule. If somebody gave you the book, then kudos to them and kudos to you for reading it. If you don't have the link to my calendar, just message me and I would be happy to give you the link. But I just ask that you read the book first so that we are all on the same page. If you don't read the book first, then it is a very tough conversation for both of us, and we will both leave frustrated. Okay, I don't have anything else. Unless you guys have something else, I am going to check out and get to work. You have a fantastic weekend, and I'll see you next Friday.